Alright guys, what's up? So I'm going to be showing you guys here real quick the dollar. So the dollar here, if you take a look on the monthly time frame, I'm zooming out here, we'll identify together long-term trend of the dollar. So if we connect this high from 1985, and then we connect it through this pivot here from 2022, and that's where we got a massive pullback as well. Even if you were to draw a line from this high to this high, we could also connect this high here, and as you guys can see, dollar broke out right here. So if we drag that, connect the lows here, this would be the target. I would say if the dollar were to come down all the way here, this would be the long-term trend line where you probably want to go long on. And then the other trend line here that I'm noticing is this uptrend from when this uptrend currently began. So it's still not as high as it was back in 2001. As you guys can see, even if we connect this high to this high here, it's still high and lower high. So if we do that real quick here, which is a trend line, connect this high to this high here. So that would make this area major technical resistance. And then if we draw a trend line from this low and then through this lows here, this is kind of like the situation right now for the dollar. So if the dollar were to break this trend line here, there will be support along the way. The next level that I would be watching for support would be this high here, and then this lows here, and those are pretty much the major levels for the dollar at this time. And then the U.S. 10-year yield, here, if we zoom out, let's go ahead and start with a parallel channel. So if we draw a parallel channel connecting this high here, and through this high here, and then just drag that down, you notice that it finally broken out over here. So it's broken out right around 2022. And if you drag that here, you guys can see it was able to break below it, but it always got back above the parallel channel. After, like, I think the longest time it's been below that parallel channel was from 2011 till 2013. And then over here it went below during the COVID crash, COVID collapse, and it managed to get back above it. Let's say right here, back in 2021. So it was below it from February 2020 till right around here, February 2021. So for like a year, and then now we're above this parallel channel. So if the US 10-year yield were to come back at the top end of this parallel channel, that would be support at that point. And then we can also draw a trend line from connecting this low here through this low here, or we could let's see here, think a better support would be from connecting these lows here to this low here, and there you go. So we have this support that goes back since April 2023. Hit it once there, hit it twice here in 2024 September, and again here on October 1, 2025. So if we start to chop here, we could potentially be going lower on the US 10-year yield. There'll be support along the way, such as this pivot high here, connected through this lows here. So around 3.248% would be the next support for the US 10-year yield if it was to go down. But if this were to go up, there'll be resistance up here. This would be, I would say, long-term level, but because it goes back a few years, but it would not be as solid of a level as, I would say, this high right here. This high goes back since 07. This was the highest it's ever gone to before the collapse. So it needs to get back above that level and also connects to this pivot low here. So around 5.245% would be the potential maximum upside for the US 10-year yield in coming months. And then let's take a look at the S&P 500 here. So this is a fresh chart. If you take a look on the monthly chart, what we could find together here. So what I'm going to do is do a parallel channel connecting the 1929 Great Depression, connecting through the 2000.com, and then just drag it up. And then this is what we got right now. And then just drag it down to the lows here. There we go, double bottom right there. And then we're actually kind of above it right now. But we'll see if we could actually stay here for a little bit longer. We might actually retest this area here around 6,500. We might actually retest this area around 6,500 maybe in the coming months, maybe by April 1 of 2026. And if we could actually hold that level, that would be the question. So you take a look here. Yeah, this level goes way back since the Great Depression. So we'll see if this level holds. Drag this lower a little bit. So there we go. So the high here, the lows here, and the high here. If you use the midline of the parallel channel as support, then we're actually above this parallel channel now. So we cleared it here, got above, and we confirmed on September 2, 2025. And now we looks like we're just chopping sideways. So what you don't want is a monthly close below this level, around 64.77 right now. So if we get a flush down there, you might expect a potential bounce, maybe creating double top, and then maybe another retest of that level. And if we were to break below that, there'll be support at previous all-time high. So this was previous all-time high before the Liberation Day sell-off that occurred back in the early of last year. So if we were to go retest that level, that'll be first support, and then followed by these lows right here. These lows, if we take this trend line, connecting that low to this low here, that would be major support at that point. So if we were to break below that, there'll be another level here, previous all-time high from 2022. And then if that doesn't hold, you know where that could go. There'll be a level along the way, like this previous all-time high from February 2020. So those are the levels we should be watching in coming months for the S&P. Then the Nasdaq here, and then the Nasdaq here, we got the dot-com bubble right here. Connect that through this high right here, and actually we could send this high here and go to this high here, and it's actually above the trend line this time. So we will see if the Nasdaq will be able to retest the upper end of this parallel channel once again. We did confirm the breakout around here back in May of 2025, and we've been higher ever since. We could also find a secondary parallel channel. So if we kind of connect the lows here to these lows here, and then drag it up to this high here, connect that high. So if this were to go higher to maybe 32,211, you may get a sharp pullback, maybe back to the midline of the parallel channel, back to previous all-time high to around 26,200 if this were to just shoot up in the coming months. And then the IWM here, Russell 2000. We can find the levels right now, the long-term level, by just connecting the highs here. So I'm going to connect high from 2008 with the high here from 2011, and then drag it down to the support right there. So if this were to go up a little bit more, it could go to as high as potentially as 344 in the coming months. Otherwise, your support would be the midline of this parallel channel, followed by these pivot lows here. And those will be the areas to watch for a potential buying opportunity. And then we have the Dow Jones Industrial Index here. So what I'm gonna do now is create a parallel channel connecting the highs from 1929, the Great Depression top, connected through the .com top right here, and see where we currently are. So we finally broke out of the .com bubble top, according to this parallel channel. Around, we broke out here, got a huge correction, got back below it, but never continued going down. So you could make a case that this is low, then higher low right here. So if the Dow were to come back, where this upper end of the parallel channel coincides with this support here that connects the lows from the 2025, if it was to come back here, you could also connect this high here. You can start dollar cost averaging here. And then let's go ahead and take a look at gold. So gold right here, if we connect the upper end of the parallel, if we make a parallel channel connecting the highs here, and then this is the high here from 2011, and then just drag it straight through, and then find the lows. The low will be right here. Okay, so we broke out, and then now we broke out here and confirmed right here on October 3, February 3, 2025. And then if we take another parallel channel, basically connecting the lows here, see here, connecting the low here through here, drag it up, then this is where gold is currently trading right now. Gold is currently trading at 45.82 right now as we speak, and it's been up for 6 months in a row already. Basically, it's had a meteoric run, as you guys can see, basically from as low as 1810 all the way up to 45.81 since October 2, 2023. And silver right now, same type of deal. This was 2011 here in the 1980. So what I'm going to do is I'm just going to connect the lows from this low here, this low here, and I'm going to drag it up, connect it to the side here. So if silver keeps on running higher, possible that silver could reach as high as $282 in 2 months, or in the next few years or so, just based on the price action. But we could also find a secondary level here, so by connecting this low here, connect this low here to these lows here, then we drag it up, connect it through here. It's actually broken out, so there's some levels up, there's some higher levels here. There'll be a bit of a steep move to the upside. So this actually I think it's if we're trying to find out where this could go next, I think it's best to probably connect the lows from here from 2003 all the way to 2020 low here. Then we're gonna drag it up. All right, there you go. That is much better. So these are both long-term trends. So if this were to shoot up, this could go to size 117 in the coming months. And the US oil here. Take a look what's going on. US oil, if we connect the highs here from 2008, connect the high here from 2022, then drag it down. I would say the lows here, yeah, this low here from 2016, we pierced it and we had like flash crash, and immediately got back above here on June 20. So it's down, we pierced it on March 20, and then we had a flash crash in April 20, and then by May we managed to get back above the channel, and it's currently trading at the midline of the parallel channel, which could act as support too. So if this if oil were to break out, there's a downsloping trend line here that I'm drawing right now in real time. If oil were to get a bounce from the midline, it can go to as high as $70. And if it starts to trade sideways after that up move, there's potential that this could break out. So that's what we're going to be watching for oil at this time. And then Bitcoin. Bitcoin is up a little bit for today. So I'm going to go ahead and draw a parallel channel connecting the lows here. Then the lows here. Oh, right here. Then just drag it up. All right, so this is what's going on with Bitcoin right now. It looks like it's trying to get back above this parallel channel. This is a long-term parallel channel. If we take another trend line connecting the highs here, the high from 2021 connected through these highs to the highs here, so that would be maximum upside for Bitcoin if Bitcoin managed to get back above this parallel channel. So that's what we're going to be watching for this month of January of 2026. And then Ethereum here, if we draw a parallel channel from the lows here to the lows here, and drag it up, it's still inside this parallel channel. So it's definitely showing a different picture here than Bitcoin. So while Bitcoin looks like it might be going lower since it's broken this long-term parallel channel, Ethereum is looking like it might actually get a bounce from here. So how high could it go if it does get a bounce? Simple, just connect these highs here to the top. So this could go to a size 49.50, maybe even appears to 5,000 if Ethereum were to get a bounce from here. And that is pretty much it, guys. Thank you again for watching. I hope you enjoyed this technical analysis video. If you have any questions or concerns, feel free to leave a comment or send me a direct message anytime. Appreciate your time and effort, and I'll see you guys next time. Bye-bye.